Lorne's first idea is Diageo, globally a player in alcoholic beverages.
Sure, Diageo, and is by far the largest global distributor of alcoholic beverages. And the key to Diageo is they've spent the last number of years pruning their portfolio and focusing on the premium brands. So, with the idea that anyone who pays, $60 for a bottle of vodka, if the price has to go to 63, they're still going to drink it. They command the overwhelming number of top-end brands, everything from, Kettle One vodka to all the Johnny Walker line and a host of others. Margins have been very strong and rising. Sales have been rising. And any time that someone comes up with, a new brand, George Clooney had a tequila brand that became hot, Diageo just goes ahead and buys it and then rolls it out around the world. And they've done such an amazing job. This is a solid revenue grower. It pays a 2% dividend yield at the present time with plenty of room for growth. They're also benefiting from the rebound in travel. Mm-hmm. People take vacations, or business people drink more when they're away. And so Diageo's earnings are bouncing up in a significant way. And it's just a world-class business that is unique.
Is it a play on a recession though, or if we get a global growth slowdown, isn't that going to be bad for Diageo?
So the recession will certainly hurt the lower end of the market. But history has shown for so many of the premium brands, people look at it as their little luxury. So they may cut back on vacation travel and eating out, but they'll continue, as we've seen in the past, to spend the extra few dollars on their favorite scotch. So it's somewhat of a recession-proof, story.
Okay, then State Street, STT in New York, are they the big custodian for securities?
Exactly. State Street is one of the two largest custodians in the world. It's an oligopoly business, and their clients are not retail investors. Their clients are these super large pension funds, institutional asset managers. They're classified as a bank, but they're not a lending institution. They charge a fee on their assets under administration. So they are impacted somewhat by the declining markets because, fewer assets under administration. That being said, this is a solidly profitable company which has been gaining market share over the years, selling at 10 times earnings with a 3.5% dividend yield. And large investors don't have much of a choice, Andy. Like I said, there's only two really major players, State Street and BNY. And so they have this business to themselves. It is a phenomenal growing franchise.
I wonder, will blockchain, if it ever rolls out in a huge way, get rid of companies like State Street?
Well, I think at the end of the day, a large part of what State Street does is they provide pricing and, they safeguard these securities. And, one has to ask oneself, large institutional investors and pension funds, safety is a large part of what they are selling.
Right.
So I'm not sure, but I will say that I suspect if actual blockchain grows, the major custody players will just incorporate that into their business.
Right. And then finally, Taiwan Semiconductor. Obviously, it has a lock on the chip business worldwide.
Sure, by far the largest ahead of Intel and Samsung. There are, Taiwan Semiconductor is building one of the largest plants in the world in Arizona at the present time. And the chip business is expanding dramatically. Of course, there have been shortages of chips, as every new car is incorporating more chips and so many other devices. But State Street is selling at 10 times earnings. Another great business, 3% dividend yield. But we're looking for 20% revenue growth once that chip facility and others get completed by 2024. So really significant upside here and, massive demand for its products.
I mean, it looks like growth in semiconductor use is never going to end.
It certainly feels that way. And, with cars and, doing more and more things, almost self-driving, many of them with lane changing technology, parallel park for you by itself. All of these things require more semiconductors. And it's the Internet of Things, as they call it, all of which is reliant on incorporating more semiconductors into automobiles, refrigerators, all kinds of things that we use in our everyday life. And so there's just massive long-term demand growth that should drive this business.
It's incredible. Apparently, some of these transistors are only 30 atoms wide. I mean, the miniaturization is mind-blowing.
It is, and those are the higher end, more expensive ones as well that are higher margin. And so, Taiwan Semi is a leader in that area. And also because they only make chips for other people, not themselves. Unlike Samsung and Intel, they are the preferred company to manufacture chips for companies who don't want a competitor manufacturing their own chips.